Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 7th of December to the 11th of December 2020. Just before we start, a quick reminder that the free GMT trading course is being released this Monday, that's December the 7th. As you can see, more modules have been added and we are now approaching 50 modules in total covering macro analysis techniques, technical analysis techniques, financial analysis techniques for companies and individual stocks, and of course, very importantly, risk management techniques as well. So you're going to have a complete education when it comes to investing in financial markets. There's also going to be over 30 spreadsheets available to download, both explanatory and also actionable. So by actionable, I mean you can input data and it will do certain calculations for you. The launch is going to be announced on this channel on Monday, so be sure to subscribe to the channel if you want to be the first to be notified as soon as this course is released on Monday. With that said, let's now head over to the charts, and in today's video we're going to be covering over 30 markets once again, looking at directional bias, key support and resistance levels, as well as profits targets for the coming week. So as always, I hope you're all having a nice weekend. Let's get into it and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Last week we were looking for further declines to the downside, and we highlighted the fact that the US dollar is in a bear market right now. And this was one of the reasons that we had a preference for dollar weak positions last week, and dollar weak positions really outperformed last week because of this bear market in the dollar. We did highlight as a target to the downside last week the 90.94, which was right here. So we did come down nicely, taking out the target in the dollar, and this is what set up a good week last week for US dollar short positions. So very simply put, going into this week, there is no change in this market. We are still focused on short positions in the dollar, and we go into this week with a bearish bias. We may start to correct a little bit first before we come down any further, so any correction back towards previous broken support from the past at the 92.43 is going to be viewed once again as an opportunity to look for further declines in the dollar index. And although we won't be shorting the dollar index itself, this is giving us a bearish bias going into next week. And once again, we're going to be primarily focused on dollar weak positions, dollar short positions next week. The next market we're going to look at is crude oil. Now last week we were looking for a rally into the 46.49 level, and we took out the target to the pip last week and we started to correct. So this was a great rally from last week. Very simply put, for anybody who didn't position into this to the long side last week, we are looking for further advances to the upside as the higher probability move this week. Any correction back down towards the 44.24 is going to be viewed as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set, the 49.31. The next market we're going to look at is euro dollar. Now last week we had a really nice rally to the upside, taking out both targets, and we finished the week sitting at the second target in euro dollar last week. Very simply put, we do still favor long positions in this market, and any correction back down towards broken resistance from the past is going to be viewed once again as an opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, the 1.2247. The next market we're going to look at is pound dollar. Now last week we were looking for a rally into the 1.34780, and we did have this rally into the 1.34780, and we started to sell off, having traded into that. Something very interesting to note in this market for this week is that pound dollar is structured to the upside, so we do still favor long positions in this market, and we are not in the business of trying to pick tops. But the 1.34780 from last week was a significant resistance area in pound dollar, and so it does lead me to think we may see just a short-term sell-off in perhaps the pound. And this is just something to bear in mind as we go through the rest of the charts this week. Keeping that piece of information in your mind, it may be something you want to put on your radar for next week, is that potential short-term pound weakness. So we wouldn't want to be short in pound dollar on that basis. We'd rather reflect that possible setup in other pairs in the direction of the trend. So in terms of pound dollar this week, we are looking for any pullback towards the 1.33230. We will be favouring long positions in this market if we start to correct, and we're going to be looking up towards the next key of resistance, the upside and the target set, at the 1.3590. The next market we're going to look at is US dollar Japanese yen. Now we start the week structured to the downside, so we do favour short positions in this market next week. We're currently pulling back towards a previous broken area of support at the 104.520. Any further pullback is going to be viewed next week as an opportunity to look for bearish setups in this market. We're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 103.11. Something to note, which makes this interesting for next week, this market, is that we've had a lack of volatility and we've really gone nowhere in this market over the last couple of weeks. So it does lead me to keep an eye on this week, because periods of low volatility are followed by periods of volatility. So US dollar yen will certainly be something I'll be keeping an eye on next week. The next market we're going to look at is Aussie dollar. Now last week we were looking for a rally to the upside, and we did have a nice pullback and a rally, but we stopped just short of our target. So very simply put, we do favour long positions in this market next week. Any correction back towards 0.73490 is once again going to be viewed as an opportunity to look for bullish setups in this market. We're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.7475. The next market we're going to look at is New Zealand dollar. Now last week we rallied into the target in New Zealand dollar, which was right here at the 70.58, and this kind of capped the move from last week and we started to sell off. So very simply put, we do still favour long positions in this market. It looks a little bit strange because all of this is one move, so we have a huge amount of space. We don't anticipate this coming back to the 0.6635 next week, for example, but any correction, and the further the better, because it gives us better risk to reward setups to our target. Any correction in this market is going to be viewed once again as an opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.7151. The next market we're going to look at is US dollar Swiss franc. The US dollar Swiss franc last week was one of the best performing pairs, and we've been looking at shorting this for the last couple of weeks, and we were paid off really nicely last week. We did take out the target set, and we are looking for further declines this week, and US dollar Swiss franc is certainly something I'll be keeping an eye on again this week. We have momentum to the downside as well, so what we'd be looking for this week is any correction back towards the 0.90970, although we don't anticipate it coming all the way back there necessarily, but any correction towards that key area of resistance is going to be viewed as an opportunity to look for bearish reversals in this market. And we're going to be looking once again at initiating shorts down towards the next key of support to the downside and the target set, the 0.8838. The next market we're going to look at is US dollar CAD. US dollar CAD was another really great move last week to the downside. We were looking for short positions and we took out both targets to the downside last week. Very simply put, going into this week, this is something we'd be looking for again, i.e. further declines to the downside in this market as a preference next week. We do have momentum coming into the market, so we'd like to see first and foremost a correction, because we are approaching the 1.2732. So any correction back towards, but not all the way to, it's not looking likely it's going to pull all the way back here, but any correction towards the 1.30950 is going to be viewed as an opportunity to look for bearish setups in this market once again. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.2732. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.2535. The next market we're going to look at is gold. Now last week we highlighted the fact gold is structured to the downside, and we have a bearish bias going into next week again on the US dollar. And this saw gold rising despite the fact that this is structured to the downside last week, that decline in the dollar. And so as we highlighted last week, gold may actually be a market just to leave this week, or if you wanted to play a synthetic hedge, you could use gold against the dollar weak positions that we looked at already. If you're not sure what synthetic hedging is, we have discussed it previously in videos, but it's going to be in the course that we launch on Monday. So don't worry, you'll only have to wait a couple of days and you can see in detail what that means. For the time being, if you're not sure, you could just leave this market. But gold is structured to the downside, so technically speaking, we are only really looking for short positions in this market next week. If you are looking to trade gold, any break to the downside here would be viewed as the opportunity to start to look for short positions in this market, and we'd be looking down towards the next key of support to the downside and the target set at the 1745.40. So once again, this is the technical structure of gold, and this is the short positions we'd be looking at. But with a bearish bias on the dollar next week, this may be a market we just leave altogether. Next we have Euro Yen. Last week we were positioning to the upside in this market and we were looking for a rally to the upside. We did take out the target set at the 125.54 and we came within a few pips of our second target last week, but we haven't quite achieved it yet. So very simply put, as we're so close to the target, what we would like to see next week is a correction, and any correction in this market is once again going to be viewed as an opportunity to look for bullish setups in this market, and we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 126.74. The next market we're going to look at is Franc Yen. Now last week we had a reversal week in Franc Yen. We reversed to the upside and we are focused on long positions in this market this week. Any correction back down towards the 114.190 is going to be viewed next week as an opportunity to start to look for bullish setups in this market. We're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 117.60. The next market we're going to look at is Pound Yen. Now last week we were looking for further advances to the upside and we have moved to the upside, making new highs in this market. You can see we're starting to lack a bit of momentum, and when you put this together with the fact that we traded into that key area of resistance in the pound dollar, it does make me question pound long positions somewhat next week. We are structured to the upside, and this does mean that we are only looking for bullish setups in this market. So any correction to the 138.91 is going to be viewed next week as an opportunity to start to look for bullish setups in this market. And if we do trade this market, we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set, the 141.01. Next we have Aussie Yen. Now last week we were looking for a move to the upside in this market, and we did get a nice move to the upside, but we stopped short of our target at the 77.94. Very simply put, therefore, anybody not already long Aussie Yen from last week, if we start to correct back down towards the 75.70, this is going to be viewed once again as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 77.94. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 79.58. The next market we're going to look at is CAD Yen. Now last week we started the week in this area and we were looking for a rally into the 81.57 and we missed the target just by a pip or so. So this was a really nice move, but we have yet to take out targets at the 81.57. As a result, what we need to see next week is a completion of this target, in which case we would look for a correction and we'd look for a rally into the next target to the upside at the 82.60. Or if we start to correct before taking out this target and we come back with a deeper correction like this, this will give us another opportunity to look for bullish setups in this market up to the first key area of resistance, the upside and the target set from last week at the 81.57. We're not going to take trades this close to the target, and if we get a break through here in this scenario, we're going to be looking up towards the next key area of resistance, the upside and target 2 at the 82.60. The next market we're going to look at is New Zealand Yen. Now last week we were looking for a rally into the 73.62, which was right here, and we did rally into this target and we started to sell off, and that was the move from last week. Very simply put, now we've taken out this target, this correction is simply viewed as another opportunity to start to look for bullish setups in this market, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at 74.62. The next market we're going to look at is Euro Franc. Now last week we highlighted the 1.0801 as an area to look for a pullback. We did pull back and tested this level almost to the pip. This is now setting up for a potential rally into the 1.0904 next week. So anybody looking to trade this market, this is now a great place to start to look for bullish setups in this pair. And if you are looking to trade this, we're going to be looking up towards the next key of resistance, the upside and the target set at the 1.0904. Now why do I say anybody looking to trade this? Well, you can see how corrective this market has been recently because both the euro and the Swiss franc are benefiting from a weaker dollar. Am I going to trade this market next week? Probably not, because I just think there are better setups with nice momentum in the markets next week outside of euro franc. But again, we put these levels on all the charts, so if you want to trade this, that's what we'd be looking for in this market next week. The next market we're going to look at is Euro New Zealand. Now last week we were sitting right here, coming close towards the next target at the 1.6841. So we're looking for a correction in this market, and any correction is going to start to set up, as we have here, the potential for bearish reversal patterns. And this is what we'd be looking for in this market next week. Any break to the downside in this market from here is going to be viewed as an opportunity to look for short positions in this market. And we're going to be looking at initiating shorts down towards the 1.6841. Next we have EUROAUD. Now last week we reversed to the upside in this market, and so we do go into this week with a bullish bias on this market. Any correction towards the 1.6193 would this week be viewed as the opportunity to start to look for any bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 1.6460. The next market we're going to look at is Euro-Pound. Now last week Euro-Pound reversed to the upside, and it makes Euro-Pound this week a bit of an interesting one to keep an eye on, because if we are going to start to see pound-dollar selling off slightly from the significant key of resistance it's traded into, we may see the euro outperforming the pound next week in relation to the dollar, and this would see Euro-Pound rising to the upside. So something to keep an eye on, just to think about next week. Any correction in this market back towards the 89150 is going to be viewed as an opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside, the target set at the 0.9112. The next market we're going to look at is EURCAD. Now last week we were looking for a rally into the 1.56820, and we did have this, and we sold off quite hard from this key of resistance and the target from last week. The market is still trending to the upside, so for anybody looking to trade EURCAD, we would favour long positions still in this market. It has come down quite steeply, so we'd like to see at least a correction and a reversal if we are looking to trade this next week. And any reversal to the upside in this market is going to be viewed once again as an opportunity to start to look for bullish setups in EURCAD. And we're going to be looking up towards the next key of resistance to the upside, and the same targets as last week at the 1.5682. The next market we're going to look at is pound franc. Now we had a reversal last week in pound franc, and don't forget this market pretty much mirrors euro pound in the opposite direction. So we are looking further declines to the downside this week, and we may see those declines if we do get a sell-off, as I said before, in pound dollar from that key of resistance. Any correction back towards the 1.21170 is going to be viewed next week as an opportunity to start to look for bearish reversal patterns in this market. We're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.1860. The next market we're going to look at is pound Aussie. Now last week we highlighted the 1.82270 as an area to look for a pullback and a reversal to the downside. We did pull back and test this level almost to the pip, and we started to sell off. So anybody not involved from last week, any further correction towards the 1.82270 again is going to be viewed as another opportunity to look for short positions in this market. And we're going to be looking down towards the next key of support to the downside and the target set with the 1.7841. The next market we're going to look at is pound CAD. Now last week we were looking for a pullback towards the 1.7088. We have started to pull back, so anybody looking to trade this market, what we would be looking for is any further correction would give us an opportunity to start to look for bullish breakouts in this market. And if we're looking to trade this, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.7509. Now personally speaking, I think there may be better places to put your money next week outside of pound CAD, but if you are looking to trade this market, that is the setup we would favour. The next market we're going to look at is pound New Zealand. Now last week we were looking for a pullback towards the 1.91850, and we highlighted this as an area to look for a sell-off, and it doesn't really get much better than that. I mean, we turned almost to the pip at the 1.91850. Very simply put, anybody looking to short this market next week, this would be the area we would start to look for bearish reversals in this market. And if we start to break to the downside, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.8744. The next market we're going to look at is Aussie franc. Now we started the week trending to the downside, possible head and shoulders reversal in this market. So any correction back towards the 0.66980 is going to be viewed this week as an opportunity to look for bearish setups in this market. And we favour short positions down towards the next key of support to the downside and the target set at 0.6527. The next market we're going to look at is Aussie CAD. Now we start the week trending to the downside, very similar to Aussie Franc as we had that reversal in Aussie CAD last week. As a result, any correction back towards the 0.9581 in this market next week is going to be viewed as an opportunity to look for bearish reversals. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, 0.9435. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 0.9310. The next market we're going to look at is Aussie New Zealand. Now last week we were looking for short positions into the 1.0461 and we did trade into the target, taking out the target at the 1.0461 before bouncing and reversing from the first target to the downside. So very simply put, going into next week we are focused on bullish setups and we may be starting to form an inverse head and shoulders reversal pattern in this market. So any correction back down towards the 1.04590 is going to be viewed next week as an opportunity to start to look for bullish reversals. And if we start to see bullish reversals in this area, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set of the 1.0643. The next market we're going to look at is New Zealand CAD. Now last week we were looking for a correction and a move into the 0.91960. We have the correction, so now we are looking for a reversal and a move into the 0.91960. This looks like a big sell-off, and it is quite a big sell-off, but all of this in New Zealand CAD is currently one move, and as a result this is simply viewed as it stands as a correction, and any reversal to the upside in this market is going to be viewed as an opportunity to start to look for bullish entries, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.9196. The next market we're going to look at is New Zealand Swiss franc. Like a lot of the New Zealand pairs, we have this big rally to the upside, and last week we were looking for a pullback and a move up towards the 0.64620. We have the pullback, and so now we are looking in this area for potential bullish reversals in this market. Any reversal to the upside is going to be viewed as an opportunity to start to look for bullish positions, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, the 0.6462. And if you want to take a more conservative target, you can look at the previous high over here, roughly at 0.6385. And last but not least, we have CAD franc. Now last week we broke to the downside, and you can see this market is very corrective, very choppy, so questionable whether this is the best place to allocate capital next week. But if you are looking to trade this market, what we would like to see is any correction back towards the 0.7010 would be viewed as the opportunity to start to look for bearish reversals in this market, and we'd be looking down towards the next key of support to the downside and the target set at 0.6887. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. Don't forget, we have the course coming out on Monday, so if you want to be the first to be notified, be sure to subscribe to the channel, as we will be notifying everybody on the YouTube channel as soon as that course is released on Monday. A big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.